Hi everybody, and welcome back to FANG Friday. This is Ross Healy, the Chairman of Strategic Analysis Corporation and a Senior Portfolio Manager at McNichol & Associates Asset Management. Well, this week was one for the books. Last Friday, I observed that today, that is Friday, has been the kind of day that puts dread into investors' soul, because they will have all weekend to sweat it out and fret. I remember very vividly what happened on Black Monday in 1987. People sold because others were selling, and there was carnage. Last week, I ended by suggesting that Monday could be an interesting day. Well, it was all of that. If there were any surprises on Monday, it lay in the near universality of the equity market sell-off around the globe. This wasn't much of a surprise to FANG Friday viewers, as I showed you 3 weeks ago how our SVA chart signaled the top for the market right here on FANG Friday. And as of a couple of days ago, the NASDAQ 100 was right back up to its HB1 price. And now we wait and see. Of course, the first move that happened when it got here was that sharp setback yesterday. It's struggled to try to kind of get back on side, but this late in the day, we see it kind of oozing down once again. It wasn't all bad, though, and some stocks held in nicely. But it is really helpful to have the SVA guideposts to sort out the high-risk losers from the quality hold gainers. And in the coming months, as market values sort themselves out even more, those guideposts will become more and more important. In bull markets, everyone's a genius. It's the more bearish markets where the SVA service has really shone, and certainly in the past. On Monday, Nvidia fell right down to its HB6 price, 33 times book, before rebounding from an absolutely dead hit. The stock hit its HB6 price with absolute dead precision. I hope you notice, on volume of 130 million shares in the first 15 minutes of trading, and has had and is having a rebound. I had drawn your attention to 6 of the other FANGs, including Nvidia, which had hit key breakpoints, and following that precise peak of the NASDAQ 100 at its HB1 price, which I showed you 3 weeks ago, all are having setbacks of greater or lesser magnitude. As I did say about such events, you had to be alert. You had to be there. And you had to steel your nerve to jump in, okay, at that, what is now an extreme low. The truth about trading downswings in bear markets is they can be very profitable in a very short period of time. But everyone around you is selling, and the stock is plummeting. And that is the time that you may be least likely to act. What do they know that I don't? Is the usual question. Last week, I laid out the SVA approach to trading. The Magnificent 7 stocks are on their way down. Only Nvidia met all my criteria for a bounce, and that bounce is probably not a safe one in the longer term. That said, I know that there are more to come, and when they happen, you want to make sure you don't miss them. If you don't, you may join our investing community in these turbulent times by going to www.strategicanalysis.ca/pricing, as so many have in the last few weeks, and have avoided unnecessary carnage to their portfolio and their nerves. Anyway, without further ado, let's take a close look at the FANGs for the week and let's see if there is any consensus as to a possible or even probable trading rebound. As always, before I do that, I'd like to say thanks to everyone who likes this video and all our subscribers. It really helps to grow our channel, and we appreciate it greatly. Well, let's start off with Nvidia, and there it is, a 2 breakpoint stop, about 36%, I think, from the top to the HB6 price, where it is holding for the moment, and may hold for a little while longer. Observe, however, where the fair market value is, and ask yourself, is this the kind of stock you want to be holding long term? Alphabet, for the second time, hit its bubble price at the same time as the NASDAQ peak, by the way, and is in the process of setting back. It's partway between its bubble price and its mid-super growth price. That's 7.4 times book and 5 times 5 times book. There, my own surmise is that it is probably heading down to that MSG price eventually. Microsoft, gosh, look at that, eh? It had a perfect peak at its HB2 price, that's 12 times book, with the index, and has been trading steadily since that on the downside. I think it probably gets comfortably to its HB1 price, and maybe Microsoft and the NASDAQ 100 will hit support at the same time, in which case there could be a very nice trade here. Netflix is just rolling over. It's in the kind of a no man's land here. I typically don't touch companies between breakpoints because it's very difficult to know where they are. However, given our market outlook, I suspect further downside risk in Netflix. Apple as well is rolling over too, not as badly, I think, as some stocks, and you know, it's been holding actually fairly nicely now for the past year, and it still has a market cap well in excess of $3 trillion. So we watched this one. I would like, however, to have a new balance sheet, and I'd like to know what Tim Cook has been doing as far as buying back shares, so I know where those breakpoints are with precision, and I don't right now. Tesla, perfect hit at its HB2 price and has been setting back ever since. It has broken support at its HB1, that's 9.5 times book, and typically when a stock breaks support, it will fall, it'll test, and then it will go to the next breakpoint, the bubble price. You know my feelings on the electric vehicle market, and I suspect it gets there with ease. Amazon was a little bit of a surprise. You know, their earnings were okay, but I think a little bit of a disappointment. The stock had been threading the needle between the HB1 and the bubble price, 9.5 and 7.4 times book, and I thought that it might hold there, but as we can see here, that was not to be the case, and the stock has suddenly plunged below the bubble price. Now, as I showed you just a moment or so ago, when that kind of event happens, you typically get what I call a breakdown and a pullback, and then the stock then moves to where it wants to go. Does it really want to go to its MSG price? Well, that's what the stock is trying to tell us right here. So we need to be very cautious. Finally, Meta remains a real conundrum. The stock does not know where it wants to be. Does it want to be a bubble stock in which case it wants to be above $505. Does it want to be a kind of a busted growth stock, in which case it wants to fall down towards its MSG price? Well, right now it doesn't know, and it continues to be in no man's land. I'm afraid that this is a case where you're going to have to take your heart in your hands no matter what you do, and the actions will have to be on you. I cannot help you. So to briefly recap, I want to reiterate what I said last week. There are two kinds of trading opportunities. The first comes when a stock itself reaches a good breakpoint, preferably one that has caused the shares to turn before. The second occurs when the overall market supports your decision. I myself prefer the second opportunity because there is safety in numbers. Referring to the SVA chart of the NASDAQ, you can see that the bubble price, 7.4 times book, gave us a great trading opportunity in the last sell-off from 2021-22 on down. And another one should be coming up this time around, if history is any guide. Now, the FANGs are only a tiny percentage of the number of the 3,000 stocks that we analyze. And in the current market environment, you may well need greater trading and investing information. It's not only the NASDAQ that you need to follow, but the Standard & Poor's and the TSX as well. As you have now just discovered, of all the times that you can benefit from taking the SVA service, this is likely to be the most urgent and important of all. And if history is a sound guide, things are far from being over. We go over all the markets during our regular weekly client seminars. And if you're not a client but want to join our investing family, go to www.strategicanalysis.ca/pricing to join today. Anyway, that's all for this week. And so for now, this has been Ross Healy, the chairman of Strategic Analysis Corporation and a senior portfolio manager at McNichol & Associates Asset Management, reminding you that nothing, including investing, is difficult if you have the right tools. And as you have now experienced at first hand, the SVA valuation of the overall market is a very powerful tool indeed. I'll see you